Welcome everybody to B Tips. Today we're honored to have Luigi Wewege. Correct if my
That's all good, mate. Yeah.
all good. So
Okay.
a quick background to Luigi. He's the senior vice president and head of private banking of the Caye International Bank in Belize. He's an instructor at the FinTech School in California, the author of the book The Digital Banking Revolution, the former CEO of Vivier & Co., a boutique financial services firm with offices in New Zealand and other locations around the globe, the former commercial manager of publicly listed investment research group and financial advisory. He graduated from the MIB Trieste School of Management in Italy with an MBA and a focus on international business, and he graduated from the University of Missouri at St. Louis with a Bachelor of Science in Business Administration with a triple major in Finance, International Business, and Management. Am I missing something here? I think I'm missing something here.
That was fantastic. No, thank you.
Welcome, Luigi.
Thanks for having me on here, Bernardo.
As we dive into our conversation, I wanted for you to introduce you to, about your career, why banking in the first place, why wealth management specifically, and what does your day-to-day work look like for our viewers?
Sure. I guess the question should rather be phrased as, why financial services? And, for me, it started around 2007 when I was working on research for the Federal Trade Commission. With a primary focus on examining the accuracy of credit bureau information. Then along came the financial crisis of 2008. And a lot of people, especially state senators, started taking an interest in this research, which was ultimately presented before the United States Congress under Section 319 of the Fair and Accurate Credit Transactions Act. And then I went from this to running the media division of an Australasian investment firm, and then from there started a quasi-digital bank, and now form part of the executive management of an offshore international bank based in Belize.
Your day-to-day life is consistent because we have many people that want to get into wealth management, financial services in general. And what does your day-to-day work look like in Belize, being an offshore private banker? It is awesome, but it is not the usual path that many people that I see graduate from the university or MBAs. They usually go to here in the US, to Goldman Sachs, to JP Morgan, other banks, but you chose a different path. So how is the work?
Yeah, so typically it's actually highly varied. And I mean, that's the one positive aspect I'd say over like going to Wall Street, the amount of things that you are across, the amount of things that you're involved in. So, for me, a day could be, conducting an interview like this now with you. I could be on a conference call with the bank's board of directors. I could be on a call with the Central Bank of Belize's Cybersecurity Committee, which I'm a founding member of. I could be discussing what positive impact Caye International Bank could offer a potential high net worth individual who's interested in opening a bank account. If I'm not on that, I'm definitely on a call with one of the bank's clients who are asking me a range of questions, from financing to what rate of return he or she could receive, if they deposited more with the bank. So it's just really highly varied, and you're not just siloed doing one thing, you're across multiple departments.
Yeah, I feel like you told me that one of these past few days you were outside of Belize, you were in other places in Central America. I feel that as a international offshore banker, you are always on the go, always moving yourself, making connections or like talking to clients because it's international bank. So I presume you make a lot of trips to meet with those clients in the first place.
Yeah, I mean, look, it's 2020, but everything is still relationship based. So no one's really going to do anything banking-wise unless they know who you are and have met you a couple of times. So there's still a huge relationship component to anything that I do. Yep.
Now, as we shift the conversation towards related to your research, because it caught my attention back in the university, you did this research about credit scores. And I wanted to know, how can individuals who made mistakes in the past, who damaged their credit score, improve from now on? What is the mentality they need to adopt to manage effectively their credit score?
Yeah, I mean, it was actually fascinating research. So let me first start with the basic premise of it. And that was, you're basing an entire economy on credit scores. So what we started looking at was, how correct is this? So, certain people's names were similar certain social security numbers were similar, and what was happening was erroneous posting. So, if your names are similar, some of yours was posted on the guy's name that was similar to you, and vice versa. And so we started really just delving down into that, and actually, obviously, it was quite timely with the financial crisis of 2008. So, it's kind of research that no one was really paying attention to. All of a sudden, state senators were calling, wanting to look at this and to potentially present it before Congress.
I'm a very big advocate of financial literacy, right? In schools, in the curriculum. And sometimes people grow up without having that, financial base that they can rely on. How can I work with my credit score so I don't have to make mistakes in my early days and then be doomed for the rest of my life?
So there's actually, I'd say there's 6 factors that you need to actually be conscious of. So the first one would be, on-time payments. So, lenders essentially like to see your history of on-time payments because this indicates to them whether you're going to make payments on time in future. I'd say the second is, your oldest credit line. The age of your oldest credit line basically indicates to lenders how much experience you have handling credit. That's quite a big one. I'd say the third one is credit used. Obviously, if lenders are looking at responsible credit usage, so the less you use, the better it is for your score. I'd say recent inquiries as well is quite a big one. Lenders don't like to see too many recent inquiries. It shows that you're a bit desperate to get some sort of credit, and so the more recent inquiries is not good. And also new accounts, I'd say that's a big factor as well. So, to lenders, opening too many new accounts in a short window of time could also point to credit problems. And I kind of touched on this earlier, but I guess the last and the 6th one would be the available credits to you. So, have plenty of available credits relative to the amount that you owe. Indicates to lenders that you manage your credit responsibly. So I'd say if you're pretty conscious of those 6 factors, that will certainly help your credit score. The mindset as well of certain people, if the smallest mistake, like a missed payment, could lead to thousands of extra dollars in higher interest. So, missing one little payment, there's a domino effect from there. And how serious this credit scoring is becoming, because in certain parts of the world, especially China, if your credit score is not good, you're not going to get certain jobs, or you're not even going to be able to apply for certain loans.
So you get credit get to that level of importance of fundamentality in the people's lives. And now that you shed the light to this issue, usually people don't think that this particular payment that wasn't being effective payment right now is not going to have a big impact in my credit score. But now I see that every piece, every small detail counts then, and is alarming actually.
It's kind of a calculation algorithm in a sense where it all factors in. And so, you might have missed a payment that you thought wasn't a big deal a year, 2, 5 years ago. That could change a loan interest payment from 3.5% to 5.2%. And that over a period of several years can actually amount to quite a bit of money.
As we touch on the digital banking revolution, your book, I really enjoy reading your book because you draw examples from the past to the present. It's interesting to see that for the most of the history of the bank, it kind of was very stagnated, the evolution. And then suddenly with the 2007, 2009 crisis and with the emergence of technology being very aggressive, it went to a kind of a V-shaped evolution. So I wanted to see, you mentioned the widespread of disruptive nature of fintech company, right? So will fintech companies eventually make retail banks fully extinct, or will make a more competitive market, or we'll still see an oligopoly with big players only dominating the market in the banking system and in the financial service industry?
Yeah, and so let me start. Obviously, my basic premise of the book was kind of capturing where we are now, and then I'm glad you found it interesting. I did as well. So I kind of went way back to kind of almost the start of time and said, okay, how did we start and how did we get to this point? And you're right, in the last 5 to 10 years, wow, it's just gone like that. And so what I was trying to focus on in the book essentially was these legacy retail banks that could possibly be in a lot of trouble. And so I use examples like Amazon. So say, for example, you sell widgets on Amazon, and Amazon knows exactly how many you're selling, what's your turnover, etc. And so if you ask Amazon, for example, for a loan, they know exactly how much, the interest that they can give you, when you could potentially pay it back. This similar example of Square. Square, all these mom and pop stores, these barber shops throughout, for example, the States. They know exactly how many people are getting their haircuts, what price points. And so if you go and ask Square, for example, hey, could I have financing or bank account, etc., they know exactly your profile and what they can potentially offer you. And so what I was trying to say is that once these guys realize that they can actually be banks, and with all this data at their fingertips, legacy banks, watch out.
I remember saying in the book that fintech comes with, it's kind of like I use this analogy or something of you're in the savannah or something, in the jungle, and you have to like attack a bull, for example. I feel the fintechs are a bunch of hyenas and the retail banks are the lions. The hyenas each coming from different size to get the prey, and then you have a big player, which is the retail bank. And I feel that the technology of the fintechs can be very disruptive, but do you think that the retail banks still have a chance to, or any leverage to gain market? Because you stated that the market in banking is very stagnated with reduced margin profits and eroded trust by clients.
Yeah, I mean, absolutely. They have major budgets. So, they can deploy a lot of money in any direction in order to get up to speed with fintechs. There is red flags for some challenger banks already. I'm not sure if you know of Movin. It was essentially the first challenger bank to ever get started, and that's gone under now during the pandemic. Because challenger banks rely heavily on volume and minimal overheads. And when you start seeing that erode, that's a problem for a lot of them. I actually saw some interesting data actually from the Federal Reserve recently about how coronavirus actually brings a flood of depositors back to major US banks. Because basically in times of crisis, people don't necessarily run towards a digital or challenger bank, but rather a major US bank. So this to me clearly shows that, it's not over yet for legacy banks. People still generally like that one-stop shop for all their banking needs. Because many of these challenger banks, you mentioned the hyena, because what they're doing is segmented. So a lot of them are attacking the retail bank on cards or on financing, on search, and so they're not that one-stop shop. So yeah, so it's not going to happen right yet, but it's happening. And also a lot of them are also kind of waking up. You look at Goldman and Apple, that joint.
I like the way you mentioned Goldman, because I remember Lloyd Blankfein, former CEO of Goldman Sachs. Actually, back in the day, he described Goldman Sachs as a technology company instead of a bank. So we see that they're becoming more technological. They spotted that, for example, okay, this millennial generation, which demands so much, is becoming a little bit impatient, because even with me, for example, if I'm using a service and the system doesn't respond with me in a second, I'm already trying to consider another option. So if you see that banks are doing also, okay, we need to catch up in this trend, you know what I mean? We need to definitely put more work in engineers, for example, even in financiers or something,
That was well played by Goldman, because, if you think about Apple and all the various in-app purchases that you make, if the two of them coming together, I think that was quite a smart move. And then, also warning signs, I guess, also for retail banks is like Google Pay or PayPal, where you're inserting all your card information into their wallet service. So essentially you've got all your various banks' cards within them. So it doesn't take much for them to actually become the bank, and then you just start utilizing them thereafter, because you're essentially already utilizing their wallet services. It's not that far-fetched for them to actually take the next step.
Very, very interesting. It's more of your opinion. You mentioned a bit about Bitcoin in your book. What is your opinion of the potential role of cryptocurrencies in that particular industry?
Yes, so the book's actually 3 editions now, and I've actually had to update it in short succession just because of crypto, because crypto's just gone from nowhere, just essentially like that. Me personally, I'm still kind of early adopter, not I'm not quite sure that I'm sold personally on crypto, I should say, because it's not quite near mass adoption. I think the underlying technology, blockchain, is fantastic. I think there could be a lot of usage for that. Having said that, though, I will admit it's been a game changer for those, say, in countries like Venezuela, Zimbabwe, Syria, etc. When you have no other means to potentially get your monies out, I think it's really helped people like that. Something interesting for me to watch, I think, is central banks now in Europe, especially China, are starting to create their own digital currencies. And that's gonna be quite interesting to see how that.
I was talking about this in previous every video that I make. I kind of mention about this because wow, a bunch of central banks in the same trend right now because they look at each other making research or projects to analyze how can we implement this. Okay, I want to be a part of that. I need to. They have conference going on. Australia now started to have a project right now with other partners, other banks. China is very aggressive. So I feel that there is two groups of central banks trying to implement their own digital currencies. Those ones that are in a race that they wanted to be the first one, and the other ones that see the potential of cryptocurrencies, a digital currency, and wanted to implement that for the long term. You know what I mean?
Yeah, I mean, you're right. China's very aggressive. They've actually the other day pilot program, a couple thousand RMB they gave to free to citizens to start seeing how they actually use it and if this can actually be pulled off. So it's also as I mentioned the Zimbabwe Syria kind of issue. It's helped the unbanked tremendously, the ones that really didn't have access to the banking system. And then for fintechs, I mean, it's kind of showed the world an alternative way to financial services. It's like you don't have to accept that banking model. It could be something else, and I think just creating just that alone, I think, has really changed the game tremendously.
Yeah. Could you explain to us, in your opinion, why is offshore banking important for wealth preservation in the first place? Why people should consider putting their money in an offshore bank account to preserve their wealth? Why didn't you consider this as an alternative? Because people like diversify their portfolios, their types of investments, asset classes, but using a different country with different currencies, with different economy, a different banking jurisdiction, why should people consider that?
Yeah, I mean, for me, I think I typically answer that question by saying there's two things. It's asset protection and it's financial diversification. Multi-currency accounts. So for example, a basket of currencies, you're not just holding everything in USD, you've got euros, Swiss francs, pounds, Canadian dollars. Also different legal system plus jurisdiction. So what I mean by that is, you could be living in country A, your company could be in country B, and your corporate account's in company C. Right. So it's kind of an asset protection play. Also international banks sometimes can offer greater, rates of return on your deposits than local banks. Also, I'd say that it can actually help global businessmen or women, entrepreneurs, especially being able to invoice clients and pay suppliers internationally. And what I mean by that, say you're in Texas and you're using the US financial system, that works. So once you're inside of it, making payments, receiving payments is very easy to do. Once you go outside of that US financial system to try and make international payments, it goes from like a 5-6 lane highway to kind of a dirt kind of gravel road at that point. And so having an international bank who understands that can actually really help you.
Yeah, especially when some countries they're in need of deposits of capital inflow, so they make those very good offers that I should definitely consider putting part of my wealth in those countries. And why Belize again? I know you probably talk about this all the time in other interviews. I particularly read a lot about your saw your interview. Just shed a light a little bit to our viewers why Belize is the typical, because Belize is one of the most promising places of offshore banking, and you represent a bank which was considered in Latin America in 2019 the best offshore bank in Latin America. So that's a big accomplishment. So tell us a bit about Belize and why people should go and invest in Belize.
Yep, and just to add, also the best private bank in Belize 3 years in a row, 2018, 2019 and 2020.
Okay, so, even better.
Even better. Look, there's a number of things. I'd say zero tax jurisdiction. It's fairly easy. You have your banking there. There's no tax applicable. There's strong bank secrecy laws. We don't just hand over your information. There has to be a process if anything has to happen. Also, no exchange controls. There are other jurisdictions where you put 5 million in today, it's potentially difficult to get out. In Belize, that's not the case. You can put 5 million in today, take 5 million out tomorrow. There's no exchange controls. The country is also politically stable, no major events. The local currency is also pegged to the US dollar, 2-to-1, never changed. The bank reserve requirements, a lot of people like this. And what I mean by that is our liquidity ratio is set at 24%, which is about 4 to 5 times higher than those in North America. So essentially every dollar going into the bank, a quarter of that has to sit in cash, untouched. So people like that. People like the fact that it's remote opening, so you don't actually have to fly into the jurisdiction to present yourself. A lot of jurisdictions do force you to actually present yourself and your passport. Also English speaking, that's a big factor, especially if you're coming from North America. You call and someone can speak to you in English.
Yes.
And then I just maybe lastly say, speak to a banker personally. It's not like Citi. If you try and call Citi, it's going to take you an hour to get through to someone on the phone. You call, bank in Belize, and they're going to answer the phone and they're going to know who you are, type of thing.
I feel like offshore banks are, because they need to attract those clients, they offer more boutique service, so I feel that right now you're saying, or if you go to Citi, if you go to any other bank, I think there is much more a path, a protocol, a bureaucracy you need to go through. Is so more in a corporate manner, but interesting to see that angle from the offshore banking.
It's not, obviously banking sometimes in North America is very template orientated. So, just follow the policies and procedures. Whereas with us, you come to us, you explain what your situation is, what you're trying to achieve, and we kind of work with you. So it's not like, hey, this is where you get forced into it. It's more of a, personal one-to-one basis.
The last question is, so you mentioned about the political stability, but I noticed that lately in the past years, there's a few forced liquidations by the Central Bank of Belize, Choice of Bank and Atlantic International Bank, which are also international offshore banks. Do you think these forced liquidations kind of damage a little bit the reputation, poses a threat for the Belize reputation as an offshore banking location?
I don't believe necessarily so, because the two of them did two very different things. Choice was orientated around their cards program. The whole business model was around the cards program, and so once that was essentially closed down, that the bank therefore went into liquidation thereafter. Similar with Atlantic, they were focused on a big project that revolved around financing. So there were two very specific things that they did, which ended up with them having to go into liquidation. Whereas as opposed to, like, for example, Caye International Bank, there's no exotic derivatives, hedges, funds. We've always had a conservative lending policy, so this shows we're one of the first international banks, and we're going to be one of the last international banks. And it's, so the ones that are, follow the rules, are the ones that stand the test of time.
Okay, very good. How it's like to be in Belize as a banker is a pretty, I would say, beautiful, stress-free life. Okay, although you're in the banking, so there is some degree of stress, of course. But how is to live in Belize?
It's a bit of it's kind of a weird disconnect in a sense, because we're actually headquartered on the beautiful island of Burgess Caye. So the entire island's geared towards tourism and people having a good time, and so it's kind of strange having to walk into the bank building. You kind of dress nicely, and everyone driving past shoes and golf shorts, t-shirts, flip-flops, etc. So it's kind of weird to be working and seeing the beautiful turquoise water outside and the palm trees, and I'm stuck in front of multiple screens, so it's kind of a strange experience, but no, it's very interesting. So
it's a huge concert for sure, Luigi. Unfortunately, our time is very short, Luigi, but I would like to thank you so much for your time. I know you have a busy schedule, so to our viewers, I hope you guys enjoy. Stay tuned for the next episode. And Luigi, once again, it was an immense pleasure to have you to disseminate years of experiences and also knowledge that we're gonna enjoy for sure. Thank you so much for being with us today.
Thanks so much, Bernardo. I really appreciate it. It was great fun. Thank you.